Well, hi everyone, welcome to this time scrolling finance. Well, I didn't expect China's bonds market to adjust so much like that. It seems like China's economy suddenly converted from deflation to inflation just because of a new policy idea, anti-convolution, but without any economic data verified. I have to say the market is irrational sometimes. Anyway, let's have a review of the bonds market, then check out the details part. Alright? Total bond yields curve was upward and steep compared to the week before. Yields of 3, 5, 10, and 30 years terms went up 7.3, 8, 6.7, and 8.4 basis points. If we compare to the one of December 9th last year, the curve was still twisted and flat. Yields of 3 years term went up 9.4 basis points. 5, 10, and 30 years terms went down 2, 18, and 14 basis points. The spread between Chinese treasury bonds and commercial bank perpetual bonds enlarged, with 5-year spread was 45 basis points. About the actions of investment agencies, in last week for short and middle-term bonds, big banks and policy banks bought 70 billion yuan together, China stock banks sold 65 billion yuan. And for long and ultra-long-term bonds, agricultural commercial banks bought 212 billion yuan, whereas funds and securities companies sold 221 billion yuan together. Next, let's check out the details part and see what happened last week. In terms of fundamentals, there wasn't any economic or financial data came out. The hot spot was a new policy concept, anti-convolution, which has caused the SSE Composite Index to stand above 3,600 points for 3 days and raised risky emotion all over the capital market. The commodities market behaved even more optimistic. Black kind of commodities like steel, coal, polysilicon, and many kinds of industrial raw materials sold to a big extent. In addition, our government published a plan to construct a series of water conservancy projects around the Yalu River. The total investment hits 1.2 trillion yuan, which definitely gets a ton of oil into the engine of China's economy. So it seems like another round of massive government investment is on its way, and which has reversed the deflation vibe now in the market. But there isn't any data which can back up the change. From economic data to inflation data, all indicators show no signs of big recovery. The performance of the stocks market and the commodities market were more like an enthusiasm driven by over-optimistic emotions. But unfortunately, it became a trend and crushed the bonds market. So from long and ultra-long term view, I don't know how long this trend will last, but the consensus of the fundamentals is becoming more aggressive than before. The long and ultra-long term bond now face a big pressure of adjustment. For funding conditions, the situation was good, at least in first 3 days last week, but it suddenly has become tight since last Thursday. The financing price of non-banking agencies went up to 1.75% for overnight. Meanwhile, the PBOC has squeezed liquidity from interbank market since last Monday, which made the funding conditions more unstable than before. But the PBOC invested more than 700 billion yuan liquidity to the interbank market conversely last Friday. So eventually, the net investment from the PBOC was almost 110 billion yuan. These contradictory actions of the PBOC raised concerns about the loose funding environment, and the attitude of the PBOC to the bonds market seems not that stable. So, from short and middle term view, the bond wasn't as safe as before. Don't be obsessed by the loose vibe now. It may change anytime. Then what should we put our attention next? First is the economic data of third quarter, especially PPI, to check out the effects of the anti-convolution policy. Second, funding conditions, which is the base and the foresight sign of investing in bonds. If the PBOC turns attitude to severe and tight, well, it's time to escape. Third, the incoming CPC Politburo meeting to see whether there are going to be more anti-convolution related policies. Fourth, the Sweden negotiation between China and the US. Can we have a happy ending there? Well, let's wait and see. About bond investment strategies, I have to say that adjustment brings opportunity. Bonds market has been fluctuating for almost 3 months. If we can survive through this adjustment, it's definitely an excellent chance to buy bonds and raise our DV1. But first of all, we don't fight against the trend. So we would better shrink our positions of long and ultra-long-term bond or even total bond positions to decrease the risk exposure and wait for the end of this adjustment. Then take a long and ultra-long-term bond to fight back. So as always, if you want to know more useful financial information about the Chinese bonds market and the economic situation, please like, share, and subscribe. I will always be here, share my understanding and experience, and waiting for you. So bye guys, until next time.